Hilton brings you new ways to stay, with experiences that let you capture the glory days. Introducing the Graduate Hotels. Each inspired by local college towns, these stays are always original and never boring. Get in touch with traditions all across the country and enjoy a stay that's a class above the rest. Book at Graduate Hotels with Hilton Honors Points at Hilton.com. It's a win-win. Hilton, for the stay.
Reality radio for a really great future. We're talking real money.
Everybody's working for the weekend because you work really hard all week for money, and on the weekend, you get to talk about it with us. So you work all week for the weekend, and then we help.
And you worked all week on that intro, probably, right?
No, I just came up with it just now.
Oh, okay. Wow. You must
Honestly,
be writing.
no, that was
that's not good enough.
That was off the
Try
cuff.
something else.
That was off the cuff,
Wow.
kind of like my third act
Good for
article. It was
you.
all off the cuff. I don't know where it comes from. The reset. You know, I was
Pure
thinking about
genius.
this morning. I was thinking about the fact that I was learning something new. Every day I go like, ooh, I want to watch a tutorial on that, and I learned something new. And I looked
Yes.
over at my wife and I went, why am I learning this? In 20 or 30 years, I'm going to be dead, and it's all going to vanish. Everything I learned, it's going to vanish. So here's my goal. I'm going to try and impart as much of it to you as I can. I need you then to pass it along. Not you, Tom, because he's my age.
I thought you were talking to
almost.
me.
No,
Okay.
I'm talking to you.
Almost.
I'm talking to you. Lean in close to your radio, and I'll talk to you. And you podcast listeners, I want you to remember all this because it's important. And if you want more knowledge, give us a call at 855-935-TALK, 855-935-8255. Wasn't
This
that
special
easy?
holiday version of Talking Real Money. You know, the holidays are here. I was headed to the hockey game last night with my daughter.
A little holiday
and told
hockey?
her we should. Yeah, I was saying we could consider this the kickoff to the holiday. And she looked at me and said, yeah, that's a good idea. I said, but maybe, considering we're going to the hockey game, we can consider it the face-off to the holiday season. Yeah, and I got about as good a laugh as I got from Don, so that's about it.
Heard there was an avalanche at the game.
There was an avalanche of goals going in the wrong net. The lamp kept going on and on. Like, wait, whoa. Yeah, it was, wow,
All right.
not pretty.
Once again,
fun game,
again, we've deviated from our original topic, which is money.
Yes.
We talk about money here on Talking Real Money, thus the name. And the things we want to talk about are things that actually help you become a better investor, a better saver, a better spender, a more happy and comfortable retiree.
Yeah, happy and comfortable. Those are two good words.
Happy and comfortable.
Well, I like it. I like it a lot.
And to that end, we suggest some tried and true methods of investing. And one of those is we want you to stop dealing with active stock picking mutual fund management. However, isn't there always a but?
Yeah, there is.
But it turns out, and I hadn't even thought of this, really, that index funds have a hidden problem.
They do.
You want to explain it? I was giving it to you, but no, that's okay. No,
There's
no.
the toss up in the air. Thanks a lot. How long have we been doing this together?
I'm just gonna
like
go
1,000 podcasts or something?
You know what? I'm doing it by myself in 2 weeks. You can just
All
have
right,
the
you
rest
go
of this
ahead.
one. I'm leaving.
All right.
No, I'm.
Go right ahead. You're doing
All right.
good.
Here's the deal. This was in the Wall Street Journal this morning.
Yeah.
If you have a small cap fund, small company stock fund, you own an awful lot of some stupid stocks. Like you own a lot of AMC. You owned a lot of GameStop. Well, some of you still own a lot of GameStop. But you owned, as of the beginning of 2021, a ton of GameStop because it went nuts. It just went nuts on stupid reasoning. Okay, I shouldn't even say reasoning. Lack of reasoning. Complete and total and utter lack of reasoning. Just because the CEO of AMC appeared in a tweet in his underwear, doesn't mean that the stock's worth $3 billion extra. But
no, I'm going to leave that one right there. I mean, AMC, Avis, of course, you own a lot of that. Yeah, and this always gets back to, we just say you go own index funds. Yeah, that's okay. And indexes do end up with more of the popular stocks. That's just the nature of owning and if you own, The S&P 500, guess what? You got a lot of Apple, you got a lot of Amazon, you got a lot of the big stocks. That's the way it works out. So sometimes you want to step it up a little bit. Maybe you get, still use a rules-based fund family. I mean, in this same article, they talk about the fact that Vanguard, BlackRock, and State Street, they've bought up a lot of these because
they had
have to.
Because they had to maintain the index's balance.
But there's others, and one of our favorites is Dimensional Funds. They dumped every share when it was no longer available to be qualified as a small company. They don't own much of these stocks because while they're rules-based index style, they kind of use smart beta and they do things just a little bit better. That is, I think, over the long haul has made a difference for you and your money.
Yeah,
so
it's sort of
a fine difference.
Exactly. It's a really fine line. But it's fascinating that some funds had a ton of GameStop and Dimensional had none at the beginning of 2021.
Tom and Don are talking real money.
Tom and I created Vestory to help everyone become a better investor, even those who will never be clients. Let one of our advisors help you start your financial plan or solve a money problem free with no obligation or high-pressure sales pitch at Vestory.com, Vestory.com.
Your guides to a really great financial future. Tom and Don are talking real money.
Now, don't let the fact that index funds have some of these meme stocks and they're overloaded and things you probably don't want a lot of. Don't let that persuade you that active management, pure active management, is better, because it's not. It's just not.
It definitely has not been.
No, it has definitely not been better. 855.
So that's not a reason to switch.
935-TALK is our phone number. 855-935-8255. And Mick, you're up. Welcome to Talking Real Money.
Hey, hi, guys.
Hey, Mick. Hey, what's going on?
Hey.
I was wondering if I retired early, would I still be able to invest $12,000 into a Roth IRA for me and my wife?
As long as you had earned income.
Yeah, no, if you retire and you have no income, then no, you may not be able to do that.
So if the investments throw off,
that's not earned income.
No, a year.
No. We're talking W-2, 1099, something like that.
Yep.
Okay. I was hoping to really do that still after I retired, so then I could, get the tax-free growth out of that.
Get a $1,000 a month part-time job.
Or convert. You could convert from
convert,
pre-tax to post-tax, since your income will be much lower.
Oh. Can you say that again, Tom?
You can take money out of your pre-tax savings, be it 401k, IRA, that sort of thing, and move it over to your Roth. Now, it's income, right? So the idea here is now my regular income has gone to almost zero, maybe whatever, or zero. You simply move the money from pre-tax to post-tax and pay the tax on it as it were income.
At a ridiculously low rate.
Low rate, yeah. You could look,
nice.
You could sort of game it and see where the breaks would be. Yeah, go ahead.
Yeah. So I mean, if I kept my income at 60, if I was drawing 65,000 off, and I put an extra 12,000 up to 77,000, still stayed below the next
bracket.
The next
Correct.
income,
Yep.
The next bracket.
Yep.
Okay, and then I could use that, the difference between 65 and 77 being 12 for me and my wife to invest back into the Roth.
Well, you can do any amount.
You
no
can
limit.
convert any amount from your pre-tax.
I forget, there is a top line, but I forget what it is. But yeah, it's a lot. You could move a lot. So it has nothing to do with the limits of a Roth contribution. This is simply a Roth conversion. So it's a completely different set of numbers, if you will. So the Roth contributions, for over the age of 50, I think isn't it 7,000? I always forget the dang numbers on these things.
There is no limit to how much you can convert.
Oh, I thought there was.
From tax deferred to a Roth in a single year.
But what Don said is absolutely right. You don't want to move yourself up to the next bracket. You want to sort of game it around what your tax bracket is. Move that money over, and now you have another bucket, if you will, of post-tax money.
Good window in between if I could draw that from 65 down to 40, then I would have another extra 25 grand to spend.
There you go.
Towards to convert over. Okay, that's interesting. I appreciate the info.
Yeah, and if you're married filing jointly, your the 12% bracket goes up to $81,000. So
And I think that changes a little bit higher in 2022
No,
too.
this
If I
is-
read that correctly somewhere, I thought I just read that they moved it. They changed the
no,
numbers.
this is the
a bit on
22
that, but-
bracket. At least that's what I'm
Okay,
saying.
all right.
Well, let me look.
Okay.
Let me 12
But
filing
at any
jointly.
rate, yeah, I think for you that and a Roth conversion would be a great
83
strategy.
550. Sorry.
All
Yes.
right, well, there you go. So yeah, they bumped everything up just a little
So
bit.
if you're making 60 from your investments and you don't want to go into the 22% bracket with any of it, which is the next step up, you can just put $20,000, convert that into a Roth. You stay in that low bracket of 12%, but then you get it out of your taxable future, and now it's tax-free forever.
Yeah, thank you for your call, Mick. And by the way, I believe was it Build Back Better,
Back Better,
the bill that just passed the House yesterday
Yeah.
eliminates the backdoor Roth IRA. However, but only for people whose incomes is for an individual over 400, for a couple over
Yeah,
450.
it was.
So it's a pretty small number.
It eliminated the back door for some people. It eliminated the mega back door altogether.
Oh, that got rid of that. They're going to make you, I think if your IRA is over 10 million, they're going to make you start pulling that out faster. So there's some rules. Now, remember, all this
It hasn't
is still
passed the Senate.
supposition. Yeah, the Senate's going to be a tougher deal, of course, because they got the one vote majority,
but
whatever.
One of our predictions, and we don't
Five.
predict very much, but one of our predictions has been
Yeah.
the backdoor Roth is going to go away someday. Someday, I believe it will.
Oh yeah, no question. I think it
It's
will.
just
By
too
the way,
good a
I
deal.
will make one. I will make one bold prediction right now.
Ooh, bold. Go for it. Go
This is
for it.
big.
Yeah.
Yeah. Stocks are going to have an excellent year in 2021.
Oh, you're just playing the odds. You're just playing the odds.
I just looked at all the 100% all equity stock portfolio, globally diversified right now.
Yeah, but-
year to date up 26%. So the
But-
chances of that going
but-
the other direction in the next 6 weeks is low.
Have we
very
had
low.
big declines? What, March of 2020?
Yeah, that's true. It was very quick.
Could it eat it all up? It could.
You asked for a prediction. I'm giving
I
you a
did
prediction.
not ask
This
for
is
a
it.
prediction. I don't.
I told you I was going to
You
give
said
you a
you
prediction.
wanted to give a prediction.
Exactly. There's my prediction.
But you know what?
Stocks
I
are
could
gonna
do
have a
this.
great
I
year.
could just say, 2022 is going to be a great year for stocks. And about 3/4 of the time, I'm going to be right.
I know. Well, great. It'd be an up year.
Up year.
Great, maybe not so. But
Well, yeah. Stocks are going up in 2022. That's my prediction.
And by the way, I will make another
2023,
prediction.
2024.
The odds are
The odds.
stocks are going to go down next year. They got to.
Why?
One out of every 4 years they go down.
Why?
So next year's that year.
But
Sorry,
it's,
I'm just saying
it's
it.
like you can flip heads 50 times in a row. Odds are you should flip tails next, then you flip heads again. You go, oh.
You can
well,
play
there
this
you
back
go.
a year from now and say, "Look at you!
Oh,
you
and
were so
and,
doggone
and
smart."
speaking of playing back, the lost
Oh, no, what?
the lost tapes of Talking Real Money are popping back
that's
up.
right. I
They're
forgot about
popping
that.
back up. We got the latest.
How many?
Well, we only have 3 up right now. 3 archives.
Oh, okay.
Right now, we've got the August 25th of 2017 show.
Boy, that was a big time.
Yes, it was actually.
I'm kidding. I have no idea what was going on. I don't remember.
That was
anything.
the big office
2017.
opening party.
Okay. Was that 2017?
2017.
Wow.
Because we were broadcasting from the parking lot.
I have a picture that keeps showing up on my wife's got one of those things that shows the pictures over and over. Anyway, but yeah, that one shows up for some
We had
reason.
food trucks and
Yeah, we did.
Yeah.
Yeah, that was a fun day. That was 2017, huh?
yep, August 25th.
Wow.
And that episode is up at Talking Real Money and on major podcast services.
Big.
Yeah, we're trying to keep people busy. 855-935-TALK is a number that means a lot. Maybe not now, but someday. Because there will come a time when you're going to need some help with a financial decision and you're going to go, oh, who can I possibly call who isn't going to lie to me? Oh, well, we may not always have the answer, but we're not going to lie to you. That's us. 855-935-8255. Call while the show is live on Saturday afternoons from noon to 2 Pacific time, 3 to 5 Eastern, or call anytime and just leave your question.
Who you going to call? It takes a whole new thing because they're doing another Ghostbusters came out this weekend, and oh God. Anyway,
I don't like sequels.
yeah,
I don't even like
they've only
watching.
done like 9 of them.
I don't
so-
even like watching the same movie twice either. I don't like doing that.
I know you're not very
I
good
hate
about that.
doing
So.
that. 855-935-TALK. Give us a call. You can also send your questions in at talkingrealmoney.com, either by typing them or speaking them there, and we'll answer them on future podcasts.
Tom and Don are talking real money.
Want a free copy of my book, Financial Physics? Well, go download it right now at vestory.com, VESTORY.com.
For your real life and real future, Tom and Don are talking real money.
Because it's really darned important. 855-935-TALK, 855-8255, 855-935-8255. I was missing some numbers in there because I'm reading a question that was sent in at talkingrealmoney.com.
Thank you for all your questions, cards, and letters of support, too. We appreciate it.
Wow, you're a nice guy.
Okay, thank you for your questions. I'll leave it at that.
Yeah, let's see. What do we got? I'm going to pick one here out of order.
Okay.
Out of order. Oh, I'm going to do this one because it's from Tukwila, since we're on Como today.
Yes.
Okay.
Yes.
Oh, and what a coincidence. It's about mega backdoor Roths.
Oh, boy. Okay.
We'll muddle through together.
Yeah.
We'll be all right.
Well, just get through the holidays. Just get through it, right?
My wife's 401k plan isn't that great, but one thing it does have is it allows after-tax contributions. She's about 14 years older than me and didn't start saving for her retirement until she was in her 40s. After that, we were married. After we were married. For the last couple of years, she's been doing the mega backdoor Roth to help catch up on retirement savings. She just got a raise and makes about $99, puts about half of that into her retirement savings. Whoa.
Wow.
She currently maxes out her pre-tax and catch-up Roth IRA, not catch-up as in the tomato stuff, catch-up, Roth IRA and HSA. I want to max out my catch-up. Well, there's been a shortage. She puts about another $20,000 a year into after-tax contributions that she rolls into her Roth IRA, and her 401k allows her to make in-service transfers. I know that the mega backdoor Roth is likely going away. Kind of a bummer since we were counting on this, and she isn't mega wealthy, just a mega saver. If it doesn't hurt, you aren't saving enough, right? Oh, if it doesn't hurt, you aren't saving enough, right? Yeah. So we're wondering what to do with her tax contributions after the mega backdoor Roth does disappear. All of our retirement funds are currently in tax-advantaged accounts. Are there any other tax-advantaged options? We currently have our money in Vanguard, so we could put it in an after-tax account there. But what should it be invested in? She plans on retiring at 65 and a half in 2024. And so
we're talking about 3 years.
Yeah, we're not talking about a long time.
I believe some of these retirement savings changes aren't coming back till 2028.
I think that
I read I thought
the back door was like 2024, so you may be okay. But
yeah, and I think there's still an income aspect to it, right? The 400 or 450.
Not on the mega. I think the mega's going, but I think the other ones are going to have an income. But that doesn't. This is all speculative at this point. It may go away. If it does go away, it won't likely go away immediately. Maybe it will, but here's the thing. In my opinion, the only reason you do after-tax contributions to a 401k is to do this. Because otherwise...
there's no tax advantage, right?
There's no tax advantage, and
you can take the same money out and put it in a brokerage account.
Right, and the thing about it is, if you do it in a brokerage account and you use some growth-oriented vehicles outside of the 401k plan, and then you take the money out, it's taxed as a capital gain at a lower,
not as income.
Not as income. So what?
Number two, if that's a crummy plan,
right?
You take that same money, you move it into a brokerage account, you own some great exchange-traded funds, be it Dimensionals, Avantis, iShares, all
Schwab,
kinds of great products
iShares,
out there.
Vanguard,
yeah, sure.
all of them have great ETFs. And we, if you didn't listen, there's Tom did a great podcast.
Really?
Yeah, I know. It's hard to believe, isn't it? Well, actually, it was your guest that was your guest was good.
Mr. Eduardo Repetto.
With his sophisticated Argentine accent.
Yeah, he worked all morning, he said, on that. So
did he?
Good.
Anyway, so Tom interviewed Edward Repetto from Avantis Funds.
Eduardo.
Yes,
Eduardo.
Whatever his name is. And he
Chief Investment Officer.
And he really did a great job of explaining why ETFs. Because we've had that conversation on the show a lot. Why ETFs now instead of mutual funds? Well, we're always hesitant about new innovations.
We'll talk about that in a minute.
we are. We're always hesitant. But the fact of the matter is, it turns out that the ETF was a really brilliant invention.
Indeed,
for
it
managing
was.
money at a lower cost and with some tax advantages. So he explains that really well. It's in a podcast that we put up on Thursday. So check out that podcast and give us a call at 855-935-TALK, 855-935-8255. You mention anything.
Mention one thing very
Tommy.
quickly.
Yes.
Really, anything?
Anything.
I already mentioned a couple of things that were complete non sequiturs, and you dismissed me correctly.
But the fact of the matter is you'll
Ah.
say them anyway. So I should just
point.
defer.
For those of you who want to know, it's up there now. Retire Meet 2022, February 26th. You can register today. We're going to do it in person in Bellevue and virtually. We're going to charge you for the in-person, free virtual, retiremeet.com. How is that? That's on point.
That's good.
Tom and Don are talking real money.
Is your portfolio a mess? You may have a case of hodgepodgeitis, but don't worry, we can help. Just set up a free, no-obligation meeting with a Vestory advisor at Vestory.com. No sales pitch, guaranteed. That's Vestory.com.
Reality radio for a really great future. We're talking real money.
And you can talk about it with us at 855-935-TALK, 855-935-8255. And Rolf, you're up. Welcome to Talking Real Money.
Hi there.
Hi, Rolf.
Nice to talk to you guys. I'd like some information when I get off the phone that maybe you can tell me the names of some. I want some funds that have a stable value, that the interest rate, varies with market conditions, but I like something that maintains a stable value. So maybe you have some recommendations.
Okay, so wait, I want to get real clear before you go. So you're looking for a fund whose value does not fluctuate, correct?
Well, they can fluctuate a little bit, but I don't want it to go, up and down 25%.
Right. Okay. So you want something relatively stable, and okay,
Right.
you understand.
Okay, but when you say, I've just got to ask another question. When you say stable value, that refers to a very specific type of security generally.
Yeah, but he wasn't talking about this. He's talking about just stable value of the fund.
Which is correct, Ralph? You're really looking for a stable value fund, or are you really looking for a fund that is relatively stable, sort of a fixed interest rate, not paying perhaps that much, because in today's environment you're not going to find that, but doesn't have a lot of ups and downs? Which would suit you better?
Something that doesn't go up and down, because you never know when you're going to need your money. And,
Yeah.
Do you want to break it to him, or should I?
I'm going to let Don be the bearer of bad news because the holidays are upon us. I'm going to try to be the nice guy this holiday season, try and change things up around here a little bit.
That's so nice of you. I get a federal pension and security, so
There you go.
I'm not doing too bad.
And by the way, okay, so do you work for the federal government? Do you still have money in the TSP?
No, I retired 10 years ago, and I had some bankruptcy issues and had to use the TSP money to clear up the bankruptcy.
Yeah, the TSP still has a very good stable value fund, I believe. I know Boeing has one. Anyway, so some employer
It's moot.
plans.
It's moot.
Yeah, all right.
It's moot.
Go ahead, Don.
It's moot.
Hit it.
Here's the reality. And this is why I asked the question about no fluctuation or a little fluctuation. A no fluctuation vehicle, absolutely no fluctuation, that you can get at any time you want is basically a money market fund or a money market account or a high yield savings account.
And what do those win us today, Don?
Less than 0.5%?
Well,
quarter of a percent?
No, I just remember we looked up the high yield savings. You can still get 60 basis points, I believe.
Really? Did it go?
At one of them, it was 60 last time I looked.
I'm going to look at the latest
One was
rates.
55 and one was 60. You go to bankrate.com, Ralph. We're not doing anything
you're
fancy
absolutely
here.
right. Lending Club,
All right.
which scares
That's
me.
It, Lending Club. I don't know who that
It is 0.6. That's generally the rate is about 0.5% on absolutely safe money. Now, we can creep up the risk scale, and we can go with short to intermediate term government bonds in a mutual fund, but that mutual fund could fluctuate up to,
and it's actually lost money this year.
Right, and it could fluctuate up to maybe 5, 6, 7% a year, maybe.
Or more if you believe the
And
experts.
it only pays about 1% per year.
Yeah, okay, 1 7/10. But okay.
Well, no. I said government. Short intermediate government.
Oh, short government. Yeah. Okay. True. Yeah, okay.
So it's a little over 1. So every step up you want to take in terms of yield adds something in terms of risk, some kind of risk, either risk of default or risk of volatility. And
the length of the security.
And we feel like broken records saying this, but it's the only truth. People will lie to you and tell you something totally different, Rolf. They'll tell you something different. They'll say, "Of course you can get 4% absolutely safe with our annuity."
Let's say 4%. Save me, please.
It's not safe. They're liars who are just trying to generate a big fat commission. It's a lie. So I'm sorry. I'm sorry to all of you.
Let me finish that, though. Happy holidays.
Happy holidays.
Help yourself to some pumpkin pie on the way out.
And we've mentioned this over and over again. If you want, here's the actual deal on safety. If you want absolute safety with your money, then you get a guaranteed loss. Absolute safety is always accompanied.
As I like to tell people, losing money safely if you have it in the bank.
Right. You're going to lose money safely. 855-935-TALK.
Tom and Don are talking real money.
Set your course for a great future with a free copy of our 60-page Better Retirement Guidebook at vestory.com, vestory.com.
Your guides to a really great financial future. Tom and Don are talking real money.
Wish we could do magic for you. Make magical money for you because it's what you want, but it's not what you get. 855-935-TALK is our phone number, 855-935-8255. Give us a call. We'll try and help you manage your money better.
Well, one of the things we can do is try to help you understand the trade-offs between making money, keeping money, the risk, return, all that sort of thing, which we
do that all the time.
on. But another thing that you do, Don, that's really nice is you're kind of a market historian, a money historian, because you've been around a long time, right? You've seen things
I've got
come
history.
And go. Yeah, you are history in a way, which is great because people need perspective when it comes to this, because new stuff comes along all the time. And most of it, frankly, is, and I'll say this nicely, garbage. It's created by somebody on Wall Street and ends up making Wall Street a lot of money, but not you so much. But you wrote a recent piece for Third Act Magazine, it's a magazine that I really do like. I think it's well written. But this is perfect because you talk about in this article about investing, and that, 20 years ago or so, people got all worked up about what? .com stocks, right? Tech stocks. It's got to be a money maker, and then it turned out that Pets.com, et cetera, went out of business. It didn't work out very well. Again, it worked out for the people selling all that stuff, but not worked out so well. Now, what's it all about? I think you mentioned two things: crypto and meme stocks or something, and people are all worked up about that. But then you went back and looked, and again, I think this article is up. You can go see it at thirdactmagazine.com, right?
Thirdactmagazine.com. Yes, you just look for Don McDonald. The article's called Investing is Evolutionary, Not Revolutionary.
Which is perfect, because the reality is things have changed over time. The good thing. I mean, so you talk about it took a long time for even stocks to sort of be introduced, right? Longer yet for mutual funds, longer yet for an index fund, longer yet, and you come along into the exchange traded fund. You mentioned this recently. It's a better structure, certainly for money in a taxable account, way better structure. That if you pay attention to those parts, not the revolution. So in some ways, Thomas Jefferson was wrong. A little revolution from time to time is not a good thing when it comes to investing. What you really want is evolution, the small changes that over time have worked in your favor. Great piece, by the way. I think this deserves a lot of recognition, and people should read it.
It was fun to write, and it's just fascinating how little change there has been in the good stuff. We went 400 years ago, we had stocks, publicly traded stocks, not very many. We've only had mutual funds for about little less than 100 years.
Not very long, yeah.
And then we got the index fund along the way, but that's been 50 years. Then
By the way, you can read about that at Trillions if you want to read.
the
the
book
on that
Trillions
history.
is out, which is I've
Love that,
got to
yeah.
read. And then we had
Fabulous.
ETFs, and that's really about all the innovation, the real innovation. The rest
And the
of it is
people that
sort of
are
made up.
Yeah, the people that are really smart about this, and you have them in your article here, a guy named Eugene Fama, who's been an academic for, 50 plus years or whatever. He went to the University of Chicago, teaches at the University, still does, I think in his 80s. And I love this quote because you've used this from him before. He said in his 50 years of research, he discovered only maybe 5
New deals.
new investing ideas, new ideas that really showed potential value. And he said that's one a decade. Wall Street creates several a week or more, right? They always have the
That's
new
right,
idea.
folks. I just really need you to get this, particularly you youngins out there. This crypto thing, this is not going to last. I feel it in my bones. I know it with all my heart and soul from historical research, from looking back at the past. This is going to be one of those flash in the pan things for the Bitcoin buyers and the Ether buyers and those kind of folks. The concept will probably live on, and it may be a concept that proves to be incredibly valuable, but not in the form it's taking today. Be careful.
Yeah, and I think the rational people you ask about, I don't think I asked him this in the podcast because I forgot, but you mentioned a few minutes ago the interview with Eduardo Repetto that's now a podcast. But I think I asked him off mic about crypto, and he said limited number of people chasing, a certain amount, a lot of people chasing a limited amount of assets. Yeah, pushing the price up. When more becomes available, guess what? Not going to work. So that was his take, but it's interesting.
And again, I come back to what's it good for? Absolutely nothing. Say it again. Crypto. Good God, now.
I'm with you. You could do that line better than I could ever do it. So
855-935-TALK is our phone number. 855-935-8255. We're just hanging out here all the time, waiting for you to call us, and we answer your questions also at TalkingRealMoney.com. TalkingRealMoney.com. Questions like, let's see if we can figure this one out, Tom. You ready?
Uh-oh. Yeah.
My employer, a hospital in Chicago, is transferring our HSA from one bank to another bank.
Health savings account.
Health savings account. This is via payroll deduction.
Sure.
Actually, they're going from Avidia Bank to Wex Bank, neither of which I have ever heard of. But there are a lot of banking companies that do specialized banking, which is probably why I've never heard of them. They are.
All right, what's the question?
They're an industrial bank. Well, here's the thing. I tried searching, but I can't find any information about Wex Bank and their HSA investment options. Can I transfer my HSA to Fidelity? I read Fidelity as a better option. Thanks. I do listen to your podcast on my way to work, and I'm learning a lot from you guys.
I believe the answer, and this could depend on the plan,
Right.
is no. I don't think you can transfer an HSA while you're still employed there. That is an asset
Unless I think they
could
they
move.
could allow it.
Can you do the...
But here's the deal. The Wex Bank, they're not going to give you investment options. It's an industrial bank. And what they're doing is they're not doing, because I've run into these HSA accounts before that are just banking instruments. They pay
So
you
there's no options? They
pay-
didn't have another set of circumstances?
No, they pay you a pathetic rate.
Wow.
And you get the little HSA debit card. They're more of a debit card provider than an
I
investment
see.
company. So
mine, for example, I think they make us keep in ours $1,000 in the cash whatever portion. I take the rest of it and put it in U.S. small cap value.
yeah, but see, I don't do an HSA because I don't do a high deductible plan.
Yeah.
But
anyway.
I do. I'm pretty sure you don't have a lot of options, and I'm really sorry because
No.
Wex Bank is a big industrial bank that really exists more as a transaction house.
That's the word you're looking for. In other words, they're just moving the money over there, keeping it for you, and then when you're going to use that, you take your debit card
so
down. And
you probably don't have any other option. Check with your human resources department. Bet you don't. But even if you don't, keep throwing money into it. A little bit anyway. At least use it. At least use it to pay
And that's a
pre-tax
good point.
dollars for your medical care.
That's a good point, by the way, because people have a tendency to pile a lot of money into it. I wouldn't do it if the only option was putting it in cash, because if you're there for 20 years and that's sitting in cash, that's not going to be worth a whole lot more in 20 years.
Take a look at what you go back
Sure.
and what do you spend towards or put your deductible in there, so that you can pre-tax
that's
your
fair.
deductible. But past that, there may be better savings vehicles. There are better savings and
Yeah,
investing
for sure.
vehicles for sure.
Absolutely.
Thank you so much for the note. We really appreciate it. We invite any of you to call us anytime, 24 hours a day, 7 days a week at 855-TALK. I did it again. 855-935-TALK.
855-TALK?
I'm going back to the days when phone numbers only had 7 digits.
Oh, yeah, the TL2 7000.
Not that
sure,
far
I'll give
back.
that one
Not that far back.
Could you
Yeah.
ring up 7701? Sure, no problem, Madge. I'll take care of it right now.
Yeah. Or you just called and said, "Can you give me Phil?" Oh, yeah, sure. Phil's, yeah, right. Yeah. Phil, I got a call for you. 855-935-TALK is our phone number. We're not that old. Give us a call. We don't forget everything. Really. Promise.
Tom and Don are talking real money.
A second opinion could save your life either physically or fiscally. Let one of our Vestory advisors help you save your future at Vestory.com, Vestory.com.
For your real life and real future, Tom and Don are talking real money.
It was 8 years ago. Some genius said, let's do an all-day session on all things retirement. And another guy said, you're crazy. It'll never work. Retire Meet was born, and it's still going after 8 years.
That was you who said it was a bad idea.
Oh, I know. Well, I come up with that
You
a
said,
lot.
what a bad idea. What, people are going to go to a all-day class on retirement? Yeah.
Yeah.
Only several hundred in person and
Every
thousands
time.
virtually. So it
You
works.
sign up now for next year, February 26th, 2020.
Thank goodness.
2022. I know. Anyway,
Thank goodness. I didn't do the
retirement.com.
website this year, so I don't even remember when the date is.
Virtual, if you don't want to come or see us at the Maidenbauer on that day, it's a great event.
And
Join us.
Maidenbauer has great sandwiches. They do. They have the best box lunches, which is one of the reasons why people come. It's like, I'm going to pay for that because the box lunch is good. Go sign up at retiremeet.com, retire MEET, not MEAT.com.
We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately and consistently predict the future, so past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Apella Capital, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. That's a wrap.